Hey, what's up, guys? Houston here. If you're looking for a personal loan, I'm going to tell you, these are probably the top credit unions I would actually look at to get a personal loan. Now, with some of these here credit unions, yes, they will allow you to get approved for a loan. Plus, you don't have to make a payment for 90 days. That's with some of these. Now, the first one we're talking about is United Nations Credit Union, okay? It pulls Experian. Now, the reason that I'm talking about this is because with United Nations, they're not only offering a $50,000 loan, but they offer a $25,000 line of credit. Now, again, you guys know how I feel about if a credit union offers the line of credit, I always choose that line of credit over that loan because I don't want to have to pay interest on something that I'm not currently using. So that's the reason why I tell you to go after that one. Now, the next one is Connectus Credit Union. Now, some of these credit unions, many people don't join because they said that they're geo-restricted. So I'm picking out the credit unions that anybody can join nationwide, okay? So it's not geo-restricted. So with Connectus Credit Union, they pull Experian FICO 9. So it's a low-hanging fruit. They're very flexible. The best part about it, they offer loans up to $100,000. Personal loans up to $100,000. Respective, their lines of credit are up to $100,000 as well. Okay, so Connectus Credit Union is one of those ones that a lot of people sleep on or they're not aware of. But I would definitely, if I were you guys and I wanted to look for a credit union that give me high limits, then Connectus Credit Union would definitely be one of those. All right. Then the next one is PennFed. Okay. And so a lot of people like PennFed is because of their pre-approval. Now with their loans up to $50,000. Now, here's the thing about it that people get confused. With PennFed, because of their scoring models, the Equifax scoring model on the FICO 9 is for the credit cards, all right? The personal loans, the scoring model is with the Experian FICO 9, okay? And so with those FICO 9 scorings, of course, when you have the authorized users, the rental payments, because they're using other factors in order to allow you to enhance your credit score. Now, another thing about PennFed that's really good is that, again, minimum credit score you can work with that they will work with on a personal loan is usually about a 620 credit score. All right. Now, one of the things I would tell you guys when you are vetting these credit unions, what thing that's biggest is making sure that you open up the checking account, the savings account, and see if they have like a low investment on a CD or a money market account. Those are going to be your key elements, especially if you're not able to do that direct deposit. Then the best thing is to make sure that you either do a CD or a money market account, especially when you're trying to build up that relationship to get more funding. Now, another thing about credit unions versus like some of these fintech companies is that, like with fintech companies, they want you to have a credit file for at least 2 years old, right? So that would be like with universal credit, okay? Being a tech company, they go from 1,000 up to 50,000. However, the credit score that they will work with is a 580, but your credit file has to be at least 2 years old with 2 trade lines on the credit file, okay? So that means that you would actually have to age the credit file, where with a credit union, long as you are a member with them and you have certain accounts and stuff, they're a little more flexible with you. Okay, even if you have bad credit with some of the credit unions that you all are familiar with, like DCU, they offer up to $2,000 with no hard pull on the credit. Okay, so with credit unions having more flexibility. All right, so that being said, by the way, DCU is using a mortgage score. So they use Equifax Mortgage 5 score. So for those of you that may be interested in that, all right, they were not on the list, but I just wanted to share that in case somebody want to look at them as well. All right, now the next one is NASA. Okay, NASA Credit Union. Now, the thing about it with NASA Credit Union, they used to use the mortgage credit score. Now, they actually use a VantageScore credit scoring model. Now, here's the thing about it. They go $30,000 on a personal loan, $30,000 on a line of credit. Also, the advantage of this, and I want you all to really pay attention, when they looking at approving you for a loan and you accept the loan, if they do the hard pull, well, guess what? You can use that same hard inquiry to apply for a credit card. You can use that hard inquiry to also apply for that line of credit. Some of them will even allow you to use that same hard inquiry to get a car loan as well. So that way you're not just leveraging that personal loan, but you're using it to get multiple loans. All right. And so that's one of the biggest things that I like about the credit unions, is because that one loan and the time frame. Because with some credit unions, it's 30 days. With some credit unions, they'll let you use it all the way up to 90 days for that one hard inquiry. Okay. So that's the reason why I'm favoring more on the credit unions. Now, you also have Connectus, okay? So with Connectus Credit Union, again, a very easy credit union. Anybody can join. They are a FICO 9 TransUnion. They're very flexible to join. And the thing about it is, say that you have hard inquiries, but you have like over 6 or 8, where with some of your major banks and stuff, they are very inquiry sensitive. With the credit union, some of them are not inquiry sensitive, and Connectus is one of those that's not inquiry sensitive that you may be able to check out. All right. Now, the next credit union I would definitely tell you to check out is Chevron. Okay. So with Chevron, again, they offer a line of credit and a loan, $25,000 line of credit, $25,000 loan, and they give you 90 days. 90 days before you make your first payment. All right. So that's the thing that excites me, especially when you're trying to get back on your feet and stuff, and you know you need to borrow money and stuff like that, for a lender to say, hey, here's 50 racks, start paying us back in 90 days. That gives you a significant amount of time for you to be able to get your situation together. Now, what I always tell people, here's the play that I would do. Say that I needed $15,000, but they gave me $25,000. I would take $10,000 of that, put it in a separate account to pay them back. Then while I work with that other $15,000, now that other $15,000, I may focus more or less on paying down most of my revolving debt. The reason is to push up your credit score to get a higher credit score. Now, again, with some of these credit unions, minimum is 600, 620 most of the time that they're willing to work with you in order to help you get approved. Now, also, you definitely have to consider those data points, because with some credit unions, again, the DTI usually maxes out at about 55%. Granted, like I was telling you about PennFed, the DTI will max out at a 60%. Now, that's the bigger difference with fintech companies versus the credit unions when you're trying to get a loan. Like if you're trying to go to Upstart and stuff like that, they give up to $50,000. However, they also, if you have a debt to income ratio higher than 75%, they will still qualify you. Okay. And also another fintech is Achieve, 620 credit score up to $50,000. DTI is 70%. So it's multiple factors that come into play when you're trying to get a loan. Again, like I said, the best part about it with the credit unions is that with their loans, you're actually able to use that same hard inquiry to get multiple products out of that institution, where with your fintechs, they only may just have that one product. Okay, so that's the reason why I try to always present you with something different. Now, we also talk about the State Department Federal Credit Union. Again, it's a great credit union because $100,000 loan, 100,000 line of credit, plus 90 days. Okay, that's the one that I would also seriously consider if I'm going to join. Being able to see that amount of flexibility, especially if I'm trying to pay down like credit card debt and things of that nature, that would definitely be my number one choice. All right.